Hey guys, how's it going? It's Andy from Magoo Investing. Happy Monday. In today's video, I want to talk about three topics that I've been seeing a lot of news events about recently, and I kind of want to discuss them and what my opinions are. In this video, the three topics I wanted to talk about is the market rally that we've been seeing for the past couple days and FOMO, or the fear of missing out, of not being involved with it. And then I wanted to talk about what could be my favorite company that I've seen right now. It's something that I've talked about in the past, haven't made a video about it, but it's kind of popped up on my radar today because of news events about it. And then finally, I wanted to end this video by talking about airline stocks, kind of the news events that have been hitting them, and the big news event that happened with Warren Buffett. Before we get started, I gotta say that I'm not a licensed financial advisor, and I highly recommend talking to a professional, someone that can find you the best places to put your money going forward. In addition, I really appreciate it if you hit that like and subscribe button, as it would help my channel out a lot. Also, if there's a video topic you'd like me to go over in a future episode, please leave it in the comment section down below. I'm gonna have a pinned comment down in the comment section if you want to add on to that. So for the past couple of videos, I've been talking about how I've kind of expected the market to continue to fall. And last night when the futures market opened around 3 p.m. my time, things were up around 3.5%. And usually when that happens, it's not really a good indication of what we're going to see when the market opens on Monday. But then I woke up this morning, started writing this video, and the market was up 4.5%. And during like 45 minutes that it took for me to write this video, now the market's up 5.5%. So it kind of seems like every time I go to record a video and expect that the market's going to continue to fall, things go up. So maybe I just need to continue to make videos and I'm kind of the good luck charm that pushes the market up, but we'll have to see. So there are two big news events that kind of came up this past weekend that have been pushing the stock market up a lot higher today. The first one is that there was a lot of good news coming out of places that have been hit really hard by coronavirus so far, mainly Europe. It's been a lot of slowing of new cases and deaths associated with the virus, and that's pushed the futures market higher. And now this morning, Trump tweeted that there was light at the end of the tunnel, which kind of seems strange based off of some of the tweets that he sent out last week and kind of the sentiment from the news conferences that he's been holding. So this optimism that we've been seeing in the past couple of days has really been pushing the market up a lot. Now that we're sitting up 5.5%, that is a massive move for the market. So I wanted to start this video talking about FOMO, or the fear of missing out. This is a topic that I've kind of discussed when my channel was a lot smaller. This usually happened for me around earnings reports for companies that I had very opinionated views upon. And before the earnings report was going to happen, I would just kind of sit back and think maybe I should take a position because I feel very good about the company. And I didn't want to miss out on potential gains if the stock skyrocketed as a result of good news. And then as the stock goes up, you don't want to miss out on any further gains, so you take a position after the stock goes up a lot. And you're kind of chasing profits. And usually when a company or the market goes up a lot, you usually have a pullback in the next couple days. So FOMO is kind of a topic that it really only affected me at the beginning of my investing career. But now that we've been seeing it with the entire market, since the lows that we hit on March 23rd, the stock market is up around 15%. And it kind of makes you go back and think about your overall opinion about the stock market. So the FOMO that a lot of people have been seeing comes over the idea of, have we already seen the bottom of the stock market? As I've talked about, the stock market fell very heavily up until March 23rd, where we saw the most recent bottom, and it's pushed up 15% since then. So for people like myself that thought that the market was going to continue to fall, and we haven't really seen that, it makes you kind of rethink your idea of where the stock market's going to go. And for people like myself that have money set aside, mainly for my tax return, for adding to my positions that are down a decent amount for dollar cost averaging, it kind of makes me feel like maybe I've missed out on some great opportunities. So you kind of have to go back and think about the pros and cons to maybe adding to your position now or waiting until later. So the pros to adding to your position right now is very easy. It's just you're adding to your position right now. So if the market continues to push up, you've gotten at a better price than if you waited. That'll make you feel a lot better for your FOMO because you're involved with your position. So anything that happens, you've already made your decision. But the cons on that is you don't really get to see what the market's going to be doing for the long term. Some of the benefits, in my opinion, to being very patient for entering positions is you get to get more information about the overall state of the market and the world economy. And in a time like right now where there's so much uncertainty and we really don't know the overall damage from coronavirus onto various companies in the world economy, I personally think it's better to wait a little bit longer before taking a position. And then the pros and cons to waiting. The pros is you get more information about the market. The more you know, the better. I think that the more information we have, the more likely it is that we're going to find profitable trades. And so for waiting to see, waiting for the dust to settle on the current state of the world, I think could be beneficial. But then you do have the cons that if, say, I'm wrong and the market does not continue to fall and it pushes up higher, you're not going to be getting the incredible deals that you were expecting if you thought the market was going to fall further. And comparing to buying now and buying a month from now, if, say, the market continues to go up, you're going to be adding to your positions at a significantly worse price. So there's pros and cons to both sides of them. Personally, I'm still on the train that I think the market's going to continue to fall. And if I'm wrong, I will eat my words and I'll take a position at a higher price, and I'm totally okay with that. So kind of understanding both sides of the coin, I think, is a really important aspect of kind of traversing this really crazy time in the market. All right, next up, I wanted to talk about what might be my favorite play for the current world economy that we're seeing right now. I've talked in the past couple of videos about companies that have been doing very well from online sales and for the consumer products like Nike. Nike was one of those companies where when their earnings report came out, people were not expecting a lot of great things. While their revenue was down a little bit, a lot of optimism that we saw with that earnings report came from the incredible increase in their online sales and the usage of their app. And so going off of that, the company that I think may be one of the best plays I've seen, or maybe one of the safer plays, is with eBay, ticker symbol EBAY. The first thing I want to talk about is that eBay has been very resilient to the overall market drop that we've seen. Currently, eBay is down around 15% year to date, while the overall market is down around 25%. This is not a company that gets a lot of news attention. The reason that it popped up into my radar is pretty much every morning I wake up and I type stock market news into Google just to see what pops up. And one of the news events that I saw this morning was that eBay had been upgraded from a neutral to a buy rating, which is very rare for a time like this. And after doing some more research on the company, it makes a lot of sense why people are pretty optimistic on the company overall. Compared to a lot of the other retailers that have online aspects to their companies, eBay is in a great spot because they don't have an inventory that they're trying to sell themselves. When you look at companies like Amazon, sure, they're going to do very well right now, but they also have a lot of risk because they sell their own products, so they have to hold on to those products. And if they can't sell them, they're going to take a huge loss. eBay is kind of similar to Alibaba from China. Alibaba has been my favorite Chinese company out there. And yes, we've seen some crazy news stories like with Luckin Coffee, but I think Alibaba is one of the best Chinese companies you can invest in. The reason behind that is they're similar to eBay in the fact that they don't sell their own products. They're just the marketplace that allows people to sell their products on. So for something like eBay, during this time when a lot of brick and mortar stores are closing down, they're allowing these small businesses to sell their products on eBay. One of the news events I saw is that they're cutting their fees associated with posting on their website to encourage small business owners to sell on their website. So those two factors right there made me feel really good about the company. And then I did some more research, and a lot of the articles that I saw said a lot of good things about eBay at the beginning, and then towards the end of it, they thought it might not be a great opportunity. And a lot of the reasons that they pinned on to eBay for not being a great opportunity is the fact that they did very poorly during the 2008 financial crisis. And my first thought was like, you know what, that kind of makes a lot of sense. We're kind of seeing a potential recession, but the world events that we've been seeing right now is unprecedented. During the financial crisis, we just saw a lot of problems with the overall economy. But right now we're seeing people that are on lockdown and cannot physically go outside. And so for people that own small businesses, I think eBay is a great opportunity for them to try to get rid of some of their inventory that they would normally be selling on a regular basis. I talk a lot on this channel about the importance of looking back at the historical data that we can see. However, when people have been comparing the financial crisis of 2008 to what we're seeing right now for a reason why you wouldn't want to take a position in eBay, I don't really see the correlation between the two. Obviously, you can see things that, the market has fallen during right now and during the financial crisis, but a lot of the factors that cause that decline are very different. We have a global pandemic right now compared to a financial crisis. So yes, you can see some similarities between the two, but I don't think that factor from 2008 should be a reason to stay away from eBay at all costs. The fact that we've seen earnings report from stuff like Nike that people are still willing to go out and buy the consumer staple product that they love gives me a great feeling about eBay overall. And there's a couple other factors that make me feel very good about the company overall. The first one that I've mentioned a lot in this video is I think it's a great opportunity for small business owners to sell their products online, for people that don't have the infrastructure of having their own website set up already. Also, they had a recent transaction where they sold StubHub for $4 billion in February of this past year. So they have a lot of cash on hand to make it through this crazy time. But the fact that they sold this company probably at the peak of what it was worth in February before all of the live events got shut down means that they have a really good opportunity for sitting on a lot of cash. The original reports that I saw said that they were likely going to be doing a lot of stock buybacks, but from what I've seen, it appears like they're going to be toning that down and kind of keeping a lot of cash on hand to make sure that they're very secure during this crazy time. And finally, they don't have any physical inventory that they have a lot of assets tied up in. Right now, they're basically just the marketplace. And so if people are willing to sell and buy products online, I think eBay will do very well during this time. You definitely have to take into account whether or not you'd rather be a part of something like Amazon or eBay. But this whole channel has been about buying stuff that the normal everyday person can buy. And buying eBay for $30 is very easy compared to buying a single share of Amazon, which would put you over $1,500. So I just wanted to talk about eBay in this video because I don't think it's getting a lot of attention compared to what I think it deserves. I think it's set up for a great opportunity. Obviously, it has not been doing as well as stuff like Amazon that is actually positive year to date still, but compared to the overall market, it has been pretty resilient to the overall fall that we've seen, and I'm expecting them to beat a lot of expectations for the next earnings report. And then finally, the last topic I wanted to discuss in this video has to do with airline stocks. I've talked a lot about airline stocks so far as being one of the biggest hurt industries when it's come to the overall coronavirus, travel restrictions, and lockdowns that people have been put on. Based off of these restrictions, all of the flights around the world are pretty much empty. I had a buddy that flew home from college a couple days ago, and he said that on his flight there were a total of 5 people on that overall flight, which is kind of interesting to think about. He made the joke that it's probably safer to fly right now than it is to go to the grocery store. And so flights have been hurt really bad. From what I've seen, there's been 90% drops in the overall passengers that have been going on these flights, and this industry has been hit really hard. One of the positive things that have happened to the travel industry was the stimulus bill that went through towards the end of March. And this gave a lot of money. It was $25 billion for payroll assistance, and then $25 billion for loans for mainly airlines. So this was a huge boost to the overall sector. But some of the weird wording that came with this assistance came that they had to stay to the same level of service that they had in the past. This meant that these flights were flying pretty much empty and just burning cash for the airline. So they're getting the overall assistance from the federal government, but they're also just burning through cash. There have been some news events coming out from the U.S. Department of Transportation saying that they don't have to adhere to that same levels of service as before. They've been cutting a lot of the smaller domestic travel, but they still have to keep some level of service. So at this point, things are not looking very good for the travel industry. One of the biggest investors in the airline industry has been Warren Buffett, who has a greater than 10% stake in Delta. And in the past week, Warren Buffett came out and they had to say that they sold 13 million shares worth of Delta, ticker symbol DAL. This is kind of an interesting idea because they had to publicly acknowledge that they sold these shares because SEC rules dictates that if you own more than 10% of a publicly traded company, you have to disclose any time that you buy or sell shares, kind of like insider trading. And for the world's most famous value investor kind of pulling out of this industry that's at an incredible discount does not give a lot of hope for a lot of people that are owning or considering buying these shares in the future. I saw some articles saying stuff like United is burning through $100 million in cash per day, Delta is around $60 million per day, and they're just burning through cash. And the longer this goes on, the worse these companies are going to do in the long run. While I talk on this channel a lot about buying great companies at a fantastic discount, this is not something I would consider buying for a long time. For the amount of cash that they're burning through right now, and with the uncertainty that we've seen for how long this travel ban is going to be going on for, this is not something I will be considering for a long time. Once the dust has settled and we've seen the overall damage that this has done to these airlines, I might consider taking a position. Obviously, the incredible discounts that we've seen for these well-established companies is very attractive, but the reasoning behind why they've fallen so far is not attractive in the slightest. So let me know in the comment section down below what you think about airline stocks overall. Does Warren Buffett dumping 13 million shares kind of change your opinion in any way? Also, if there's any videos or companies you'd like me to go over in a future episode, please leave them in the comment section down below. Thanks for watching this episode, stay inside, and I'll see you in the next video.